All right. Good afternoon, everyone, and welcome. It's a pleasure to have you join us today at this session themed Women, Wealth, and Success 2.0, Building a Financially Strong Business. My name is Dara Ahmed, Head of Partnerships at Bluebulb, and I'm your humble host for today's session. Today's webinar is powered by Bluebulb. And if you're new here wondering what Bluebulb is, we're a leading foreign exchange and cross-border payment company, and we're simplifying cross-border payments for African businesses. Through solutions like Orbiter, we help businesses get visibility and control their payments, FX, treasury operations, and make smart financial decisions. So far, you may have picked that we work closely with businesses operating across borders. That is correct. And we've seen that it's one thing to build a business, but building a financially strong and sustainable business is an entirely different ballgame. And that's why the conversation we're having today is very necessary. We'll be talking about how businesses can build the kind of financial structure that supports long-term success. And to facilitate this conversation, we have an incredible lineup of speakers, women leaders in finance, in business growth, entrepreneurship, doing fantastic work in their field. So from your experience in international treasury, what are the most common financial gaps that you've seen in growing women-led businesses, and how do they limit skill?
Thank you very much. I want to first of all appreciate Bluebulb for this opportunity to be on this panel. I don't take it for granted. In terms of my experience in women-led businesses across the African continent, what I've seen based on my work in Treasury across the subsidiaries of Access Bank, some of the key factors that affect women-led businesses in relation to limitations for their financial gaps include things like a weak working capital management. And when I say weak working capital management, what do I mean? So things around the receivables, payables, inventory, the ability to track them intentionally and effectively, I think it's a gap that we need to fill if we are going to ensure that the women-led businesses continue to be sustainable. So when I talk about payables, some of the women-led businesses across Africa, they tend to grant extended credit periods to their customers for goods or services, goods sold or services rendered. And when those credit terms are extended in terms of the period for repayment, what it means is that the cash flow that needs to come in to ensure that the business continues to be in existence seems to come in much later than required. And there's also something around poor collections discipline. This is around the receivables. So even when credits are granted, there seems to be some lack of organization, inconsistency, and there is no firm, behavior in terms of ensuring that all of the debts owned by customers for products sold to them or services rendered to them are collected as and when due. Some women businesses also tend to, in the process of trying to ensure that they meet some maybe sales targets, purchases targets, or in terms of trying to scale their businesses, they tend to pay upfront to suppliers. And what it means is that money goes out, and maybe in terms of the negotiation of the conditions for receipt of the goods, sometimes those goods do not come in on time to enable them sell and to get back their funds or the recoup the cost of operation. So what that does is that you give your creditors a longer time to pay you. However, you have paid upfront for the goods and services you intend to sell based on your business model. What that does is that it creates what we call a cash conversion gap, where money is tied up for too long. and it then makes it difficult for businesses to expand quickly and efficiently. Another aspect I would think that limits women-led businesses is around being aware of the financial risk inherent in the business operations of these women. The financial risk can be maybe isolated into 6 major risks. The first is liquidity risk. Liquidity risk is related to the inability to meet short-term financial obligations or to sell your assets quickly without significant loss. If I'm going to profile liquidity risk, I can then divide it into 2. One aspect is funding risk, while the other aspect is market risk. Funding risk relates to inability to raise capital as and when needed, and also the ability to raise capital at a reasonable cost. So if you're not aware that that risk exists, you might not be able to ensure that the timing of your capital raising activities are aligned with when you can raise them at efficient cost. Market risk also relates to changes in market variables like interest rates, foreign exchange, and commodity prices. In terms of interest rates, a lot of these women-led businesses, maybe they rely on loans to be able to scale their businesses. So if you have a loan and the interest rates keep going higher and higher on those loans, it means that the ability to repay the loans might be at risk. If you're involved in foreign exchange, maybe cross-border transactions, you are also exposed to foreign exchange risk if the rates move in a direction that is not favorable to the costs that you entered into those transactions. And thirdly, under market risk, we have something related to commodity prices. If you've bought commodities that you need to resell at a certain price, and you bought it at a higher price, and then market prices move and it's not in your favor, maybe prices drop, then it means you're going to be offloading them at much lower rates. That would lead to loss. We also have things related to credit risk. You've given credits to some clients and they're not able to repay you within the period you have expected. So it will affect your cash flow and the continuous operation of your business. We also have what we call operational risk. These are losses that arise from internal processes, systems, or human error. And maybe I'll just stop with my response on this question here and let's move ahead. Thank you very much.
Thank you so much for that elaborate breakdown. This is what you get in a masterclass. Thank you so much. All right. Hi, Oluwaseun. I would like to bring you in here.
Hi,
Your role driving.
Thank you for
Hi,
having me.
Oluwaseun. Can you hear me?
I can. Hi, Dara. Thank you for having. Can you hear me as well?
Yes, I can hear you now. So from your role driving with business growth at Bluebulb, what distinguishes a business that is simply growing from one that is financially structured to scale globally?
Hi, Dara. Can you hear us now?
Hi, I can hear you. Can you hear me now?
Yes, yes. Okay.
All right. So I was asking, for your role at Bluebulb, what distinguishes a business that is simply growing from one that is financially structured to scale globally?
Okay. Thank you for that very insightful question, Dara. And I think the 2 keywords we want to play with here, want to zoom in on, is growth versus scale. And sometimes, even though it looks like you can use those 2 words interchangeably, there is a profound difference between growth and scale in the world of business. Now, growth means a company or a business is growing bigger or is emerging. However, scale is what our women-led businesses want to really look at. Because in the world of business, turnover or revenue can be really misleading. And if our women entrepreneurs or women C-suites executives on this call, if we don't take time to be sure that the economic activity we are putting in is actually profitable, then we may be running enterprises that may be seen as being big for nothing. So I think the biggest difference between a growing business and a business that is scaling is the fact that when you're fixated on growth alone, what you're asking yourself is, how do we make more money? And so all of your economic activities, your planning is just looking at the fact that, am I making more money? However, with scale, structure is king. What you're asking is, how do I make sure that I am growing efficiently and that I am supporting my growth with processes that can help me sustain that growth? And that's why you see that, for example, statistics will tell you that startups, the average life cycle of a startup or the chances of a startup surviving past its first 5 years is about 20%. And it's because sometimes when we start up in business, we don't place the required emphasis on ensuring that there is structure to sustain our growth. Because growth on its own actually can hide a lot of efficiencies. And a lot of businesses are growing, revenue is increasing, you're pushing into new markets, maybe because your competitors are going into new markets and because those markets are opening up. But behind that, you don't have the structure to keep up. So for example, how do I know a business that is ready to scale? Is that a business that is really ready to scale understands cash flow, not just revenue. They understand the cost structure across markets. The fact that there is a market open for me. Have I done the metrics? Have I done the deep analysis to ask myself if entering this market is really going to be profitable, right? And the businesses that are built for structure, built for scale, also understand how their money moves end to end, right? So it's not guessing, it's not reacting, it's making informed decision. And to be able to make informed decision, you need knowledge and you need visibility. Because once you start as businesses, once you start to operate across borders, complexity increases, different currencies, timelines, regulations, and if your financial foundation isn't strong as a business, growth can become a strain. And then you start to see things around diminishing results. And then sometimes in the business world, without calling names, you find businesses that everyone presumed were doing very well. And one day you just wake up and you hear some financial news that's filing for insolvency or bankruptcy because we were not looking at structure to support whatever growth or revenue aspirations that the businesses have. So for me, the difference is growing business is expanding, but a scalable business is built to handle that expansion without breaking. And I'm very glad about the opportunity and the fact that Bluebulb has put together this very packed webinar, and I'm hoping that our participants on this call will pick a few, or if not a lot of things that will help them restructure their businesses to ensure that they can scale in whatever markets they choose to expand into. Thank you, Dara.
Thank you so much, Oluwaseun, for that brilliant response. I think two things that stood out to me would be having an efficient process and structure in place to scale. And then secondly, the importance of understanding cash flow in your business. On to Mrs. Maureen. You've built a strong brand and business with Vallore. What financial decisions have played the biggest role in making your business sustainable?
Thank you very much for that great question. And thank you to Bluebulb for having me. Thank you for this opportunity to learn and share with you and the other speakers. Thank you to my co-speaker, Mrs. Ojeagbase, and to Mrs. Daramola. I hope I got your name right. That was a really good one, Mrs. Ojeagbase, and the last speaker. And I'll make it simple. I'll pick up from where you stopped. Answering this question, I'll flip it the other way. For every business, especially the female-led businesses, why you're in that business has to be clear. That is the foundation. That is where to start. If your why, your purpose is very clear, and that why will speak to the value proposition which you bring in what you do, be it commercial trade, be it consulting, be it production or manufacturing, whatever business you do, once your why or your purpose is clear, your value proposition, which is why you're doing what you're doing, will be clear. And once you have that, the question about scaling or growing will be already addressed. You have that purpose in mind, what you want to achieve, why you're doing what you're doing in whatever industry or type of business. The question of growth or scale will be addressed. And as we know, when you lay a foundation, you start off as a startup, as a baby, then you start to grow before you talk about scaling. And you must put structures in place. So some of the financial decisions made are, why? What is my value proposition in this business, in the services that I'm offering? Who is it serving? What is the promise? A value proposition is a promise kept. So if you check the value propositions of all companies, for example, Amazon says that they are the most customer-centric organization in the world. That's their brag sheet. What is your value proposition? So when you're looking at that scale, that length, that time zone, that horizon in the future, you start to build for sustainability for long term. So these are the things that have shaped my financial decisions. Okay? So when you start to look at it, you look at the short term, you look at the mid-term, you look at the long term. And so you will know when to take certain decisions. First of all, understand financial literacy is key. What we have spoken, the last two speakers have dwelt on, is financial literacy. We've spoken about cash to conversion cycle, recovery cycle, collection cycle, and all that. It is basic financial literacy. Let everyone, we all need to, when we know the value that we are promising to give through that product or services, now sit down to count the cost of making that promise real. We will know how much it costs to put that product or service to the market. We will understand who our customers really are. We'll understand what it takes to serve that unique set of customers, the costs. And when we do all that financial projection, ab initio, we will think short-term, mid-term, and long-term. And our financial decisions will be based on that thinking, and that thinking is our strategy. I hope that answers the question. So I'll stop here because short of going in depth, which you don't have the time for, I hope I've been able to give the basic, simple terms, in very simple terms, of what needs to be done so that everyone on the call, I don't know the other faces on the call, female-led business owners will understand that the financial decisions are framed by your thinking. First, why you are in business, is your purpose, which is the value you have committed to give to your customer, which is what you are doing, what you're selling, what you're marketing, what you're delivering on, and the cost of doing that. And you have to do it profitably if you're here for the long run. Those are the things that have shaped my financial decisions. Thank you very much. I'll stop here for now.
Thank you so much, Mrs. Maureen. That was really detailed. So you've spoken about this, but we would like to hear a little from Mrs. Uloma as well. Many women founders focus on revenue, but neglect cash flow, FX exposure, and treasury structure. How critical are these to build a truly resilient business?
Okay, thank you very much once again. I think this question is very apt given the current financial climate and the global activities that we're experiencing in Africa and worldwide. Regarding neglecting FX exposure, cash flow, and treasury, what I think are the main issues here is I think a lot of women-led businesses would naturally focus on revenue and profitability. However, it's not the profitability that pays the bills. What pays the bills for the organizations to continue to be in existence is the cash flow. You might be profitable on paper, but if you don't have the cash in, your business would likely be stranded in terms of meeting up its obligations and being able to continue to procure raw materials and inputs to continue to serve your customers. If a business is profitable, but its cash is tied up in receivables, payments are poorly timed, and working capital is not managed. In the previous question, I think I addressed these gaps. So those are very critical. You have to ensure that your cash management ability is very efficient. When businesses scale, the gaps that are experienced in this cash conversion gaps, then they're then escalated and more pronounced because at that point, you are much bigger and you have a lot of expectations in terms of suppliers, in terms of vendors, in terms of payments you have to make to continue to be in operations. So what cash flow does is that it gives you stability, it gives you flexibility. When there are new business opportunities, if you don't have the cash to go in and take advantage, then you've missed the opportunity. And without cash flow, growth then becomes fragile because you seem to be stuck at a particular point. In terms of FX exposure, especially in the African continent where we are mostly import dependent, most women-led businesses then tend to maybe have to deal in importation of raw materials or doing cross-border transactions to be able to continue to be in business. So the moment a business starts to import and prices its goods or services in foreign currency or tries to expand across borders, it is then exposed to foreign exchange. And if foreign exchange exposures are not appropriately managed, then the margins or profit that the businesses have earned can easily be wiped out. Pricing can then become inconsistent because your planning is not reliable. So in this case, the women-led businesses have to be aware of what we call foreign exchange hedge products. These are products that financial institutions typically prefer to clients to enable them hedge or determine their costs in terms of foreign exchange ahead of time. And then in terms of structure, having an efficient treasury structure cannot be overemphasized. It helps to drive the behavior of discipline and control across the business. And without efficient treasury structure, the decisions you then make are more reactive than proactive. If you have an efficient treasury structure, you know your cash inflows, you know your cash outflows. You have policies that are in place that guide the behavior of all participants or stakeholders linked to that business. Decisions should not be reactive. We have to plan ahead of time. We need to be able to manage our cash flow and liquidity effectively. I think I've dwelt on that. We also need to anticipate and mitigate risk. So apart from financial risk, there are other risks that affect female-led businesses. There are risks around regulation, risk around compliance, risk around being concentrated on few suppliers. So you can imagine if you are relying on a supplier that maybe most of the goods are coming from the Middle East. We all know what is happening in the Middle East at this time. So if you're highly concentrated on relying on a supplier bringing goods from that route, your business can be brought to a ground halt because they are not able to, execute at this time. Having a good treasury structure also helps you to operate with discipline and clarity. If you have a plan, you can then track your performance against that plan. But if you don't have a plan, you don't know what to track. If you don't have a clarity on your cash flows, you're not able to determine when you should be investing, when you should be borrowing, when you should be lending. And it's also important for us to know that cash flow gives us as women-led businesses, control, which is the critical aspect of survival of any business. If you're profitable, but you're not liquid, you might not be able to be in existence by the next week, depending on the obligations that fall due or the payments that you expect from suppliers that are yet to come in. So your cash is tied up and you're not able to make progress. We have to also be aware that risk management structure, having them in place helps us to protect the margins that come into the business. I know that most of us focus on profitability, revenue, growth, and all that. But if you don't have an efficient risk management framework, all of those margins can disappear. And ultimately, where our land is that structure enables sustainable growth. Without having structure, the profits you're making, the cash flow you see, they may not be sustainably preserved. So that structure just helps with corporate governance, ensuring that approvals of certain kinds of payments are not held by a single person. There should be, in terms of ensuring that we do not focus on just a single aspect of a supply chain in terms of relying so heavily on a single supplier and all that. It will help us to ensure that we have sustainable continuity of the business. Thank you very much.
Thank you so much for that response. I think some very clear points to take out are clarity on cash flows, liquidity management, managing risks, and having an efficient treasury structure. You stressed on that as well. Thank you. So we're going to go back to Oluwaseun. How important is access to efficient payment rules, FX management, and treasury visibility in building a financially strong business?
Hi, Dara, can you hear me?
Hi, Oluwaseun. Yes, I can hear you.
Great. Okay, so thank you for this question. And in providing my response, I'd like to speak a bit about what Maureen had mentioned as to your brand promise. And for us at Bluebulb, our brand promise is simplifying cross-border payments for African businesses. And as I take that role very seriously, I'm going to quickly tie it to why it's important for us to continue to drive that vision in helping our female-led businesses. I had sat down with the CFO of a particular airline talking about our services, and of course they do business with Bluebulb. And he had explained to me that, he said to me, Oluwaseun, do you know that for every day my aircraft is grounded, for example, an aircraft is flying and a bird enters the engine duct and they quickly need to buy a spare part to replace it. He says, Seun, for every time that aircraft is grounded, I'm losing up to $100,000 in revenue per day. And that's one of the reasons why efficient payment rails are important. Because in business, we must plan for unforeseen events. And you want to make sure that you have partners who are able to support your foreign exchange requirements at the shortest time point. And in responding to that concern, for example, to drive efficient payment rails, Bluebulb has launched a platform called Orbiter, which is readily about giving businesses one place to see and manage their payments and cash flow wherever they are in the world, so that instead of reacting to issues, they can actually plan ahead. So for example, on Orbiter, you have a Naira wallet, and if, for example, maybe at 10 p.m. you just realize that you are out of stock, or you have a large order or a particular
we can't hear you.
Can you hear me now?
I can hear you. I can hear her loud and clear. Very loud.
Okay, I think it's on my end. Please continue.
Yes, so for example, at 10 p.m. for a plant that runs for 24 hours, your operations manager running night shift tells you a particular machine has packed up and they need to send payment to a supplier in less than 6 hours. You can go to Orbiter, load your invoice, log in that request, and almost immediately, payment is pushed to your supplier. And of course, you can decide to now air freight the parts so that your operations is not impeded. So efficient payment trails are so important, because in the world of business, time is literally money. And so a lot of businesses focus on making money, in any case, businesses are founded to make money, but not enough attention is paid to how those monies actually move. I've given clear insights on what it means, for example, to an airline business if an airplane is grounded for 1 day, for example. Uloma has also mentioned time and again why liquidity management is very important, and how much value is lost when companies or women-led businesses are not paying attention to proper liquidity management. But one thing I want to really emphasize is you can manage what you see only. So as we are talking about our financial structures, it's important that we pay attention to visibility. You need to ensure that you have visibility over your cash positions. Otherwise, you'll be making decisions in the dark. And making poor decisions in the world of business can be so costly. It can actually lead to insolvency. But what we are now seeing now is a shift. We're seeing businesses starting to realize that financial infrastructure is just as important as revenue growth. And of course, at the end of the day, we know that a financially strong business is not just one that ends well, it's one that has full control and visibility over its money. And I know that Maureen spoke about it. Uloma also emphasized the importance for controls as well as visibility. And visibility changes everything. Why? It gives you confidence. It gives you speed, and ultimately it gives you control. And these three concepts, i.e. speed, confidence, and control, are very critical for women-led businesses looking to scale sustainably. Thank you very much, Darren.
Thank you, Oluwaseun, for that response. Am I audible?
Yes, you are. Very audible.
All right. Great. Okay, so at this point, we're going to have a very, very short break. Before we continue, would like to share a message from Bluebulb. Stay with us. We'll be right back.
There are two sides to every successful business story: the business itself and the partners that help it grow. Between both sides are critical players and trusted characters that keep the plot going. For businesses pursuing international success, the story is never complete without a critical character. One that delivers instant cross-border payments
with competitive rates and operates with care and compliance.
Bluebulb is that character. Contact us today and let's play our role.
Bluebulb, simplifying cross-border payments for African businesses.
So, Ms. Uloma, hello again. Are you still with us? Thank you. Good. So what are the first financial systems or controls a business must put in place if it wants to scale beyond its local market?
Thank you very much. And I think in giving the first financial systems and controls that must be put in place, what I would be preferring would be addressing the gaps I had identified in the course of my response to the first question. And for me, the first and most critical control tool that should be put in place is cash flow forecasting. It cannot be overemphasized. We need to know what cash is coming in for the business, what cash is going out, the timing, and how the movements will happen. It should be tracked very frequently. It's recommended for it to be tracked daily or even intraday, because even if you say daily, some things can come up in the course of the day, and you need to be sure that you're on track in terms of the amount of cash going out and the amount of cash coming in. You also need to have a central visibility and control over the cash across all locations of your operation. We're talking about scaling businesses here. So what it means is that either the business is growing in terms of within Nigeria, or possibly cross-border, or possibly the different segments in terms of the actual products or services being rendered to customers may be diverse. So what it means is that you need to have a central visibility and control over the cash that comes in or goes out from or to all aspects of the businesses that the women-led, all aspects of women-led businesses. You cannot manage what you can't see, according to what Oluwaseun said earlier, and visibility becomes more critical as you expand and try to scale. The next point I'll make in terms of what we need to put in as systems is having strong payment controls and approval processes. Before you think of scaling, we must ensure that our businesses introduce what I'll call discipline around how money leaves the organization. And in terms of achieving discipline, we have to talk about things around defined approval limits, segregation of duties. So once a payment amount or category is beyond a certain threshold, you should make sure that it's structured in a way that no single person or individual is able to control payments of that nature. There should be documentation for the payment processes. It helps to reduce error, it helps to reduce fraud, and it also helps to manage uncontrolled spending. In my earlier response, I'd also referred to the fact that having treasury policies in place is very critical. No matter how basic those policies might seem, it may not be complex, but they must exist. We should be able to know how the cash is managed. We should be able to determine the financial risk and have proactive mitigants to manage those risks. And we should have know whose authority is required for setting financial decisions. And we also need to be aware of the FX risk and the management framework for that. As we expand beyond borders, we need to be aware that a lot of our business operations would have FX reliance in terms of whether we are buying or we are selling, or whether we're importing or exporting. So we need to be aware of certain financial products that help to hedge those risks. We also need to have clear reporting and financial controls. We need to separate our personal financial activities from that of the business. And it helps us to ensure that we are accurate in terms of our reporting, we are timely, and we also need to standardize these reports such that it makes it easy to attract investors and access funding. When investors find it difficult to separate your personal business activities or your personal activities from your business activities, it then becomes vague in terms of being able to track where the funds are going to or whether they are being optimized. And most importantly, you need a very reliable banking partner. As you begin to scale, your banking partner helps you to expand across borders. I know that Bluebulb has used the opportunity on this platform to talk about their products. So I also want us to be aware that Access Bank is present in 15 African countries. We're also present in the United Kingdom, and out of the United Kingdom, we operate our branches in Paris, Malta, Dubai, China, Lebanon, and our expansive activities are still ongoing. So if you're looking for a reliable banking partner, Access Bank is highly recommended. Thank you, Bluebulb, for this platform. So what we are saying here is that as you begin to expand, you need a banking partner that is reliable, that is also possibly present in the locations where you have mutual business operations or business interests. You need to have good access to trade finance. You need to have good access to FX solutions. And you also need to have good liquidity support. You need a banking partner whereby if you need short-term, medium-term, on long-term facilities, you're able to gain access to that. If you also have excess cash and you're looking for investment outlets, you're able to get, premium value for that. You also need a banking partner that can give you superior advisory support as complexity increases. So for me, as we scale beyond the local market, we need to be more proactive than reactive. Instead of having a reactive financial management position, we need to be more proactive in terms of our strategies. Thank you very much.
Thank you very much, Mr. Uloma. I think all the speakers today have spoken on the importance of tracking your cash flow, how much comes in, how much goes out. You also touched on a couple of really helpful things like building efficient systems, mitigating FX risks, and of course, a strong banking partner, which, you took out the time to talk about Access Bank. We really appreciate that. So on to our next panelist, Oluwaseun. In your experience, what are the hidden financial frictions that slow down businesses, and how can they be eliminated?
Thank you for your question, Dara. And Uloma has made my job a bit easier, because these hidden financial frictions that we're speaking about, I'll liken them to the little foxes that destroy the vine. And if you've listened carefully to all of our speakers so far, a number of words have been repeated over and over again. We've emphasized the importance for discipline. We've also discussed control extensively. And I think that the biggest frictions in business are not always technical. They are not usually the very big issues or concepts in business. They are sometimes behavioral and operational. They look very small, but their impact on business expand over time. And that impact can now be a differentiating factor between a business that scales and thrives and a business that doesn't. Right. So in my experience working with different businesses at various stages, I've seen that the real challenges are not often in how financial decisions are made day to day. For example, when you're growing without financial planning, revenue is increasing, but there's no clear plan for how the growth is funded or sustained. If, for example, I made ₦1 billion in revenues last year, and I'm making, and I delivered, or in 20, let's take it back. For example, a business makes ₦1 billion in revenue in 2023, and in 2024, it's made ₦2 billion in revenues. To the average person, that's growth. What we've not looked at is what was the cost of that growth. For example, was I self-funded when I did ₦1 billion in revenues? And did I, for example, have to take on additional credit exposures to deliver ₦2 billion in revenues? What was my profitability at the ₦1 billion in revenue levels? And what is my profitability when I deliver ₦2 billion in revenues? And what is the actual return on assets employed? It is so important. And just before I forget, if there's anyone that is a female entrepreneur on this call, and for example, you don't have business administration or financial background, I would like to strongly recommend that you, for example, take on courses on Coursera, for example, along the lines of finance for non-finance managers, because you must understand your numbers. Our numbers, the financial reports or your financial statements are always speaking. But if you don't know how to interpret them, then you may not be making financially sound decisions for your business. And you really, as the business owner, as the visionary, as the entrepreneur, you don't want to delegate the role of understanding your business figures to, for example, your CFO or your accountant who doesn't have as much stake in the business as yourself. Another thing, another concept that can lead to financial frictions and slow down businesses is blurring personal and business finances together, especially in early stage businesses. Now, Uloma had mentioned in her conversation, had spoken about potential fundraise and how it can be a leverage for a business to scale globally. Now, what investors want to look at, they want to look at the capacity and competence of the founder or co-founder of the business. And one of the things that shows capacity and competence is the fact that there is a clear distinction between personal and business finance. And for the female entrepreneurs on this call, we've also, I know it's been said over and over again that even though you're a founder in the business, instead of just putting your hand into the business process, learn to also put yourself on the payroll. And if you don't have liquidity enough to pay yourself on the payroll, let it be on the records that the company is owing you so and so salary for so and so months. But please, let's learn not to blur personal and business finances together. Now, another concept is, or another hidden financial friction is reinvesting blindly, putting money back into the business without clear priorities or expected return. So I understand that we would know what retained earnings means and all of that. But the question you want to ask yourself is, why am I reinvesting money back into this business? And what is the rate of return? Is it more profitable for me, for example, to put my money back into my business or continue to run within this level of operations and put my money into, for example, another short-term money market instrument that can yield higher returns for me? We need to also look at this concept properly. Why? So that we can ensure that we are optimizing cash flow, which is what our first speaker, Uloma, had also spoken to us about when she was responding to our first questions. Now, and again, another thing that can lead to financial friction is avoiding the numbers. You can't be an effective business leader if you don't understand your key financial statements. It won't work. You have to understand your numbers, and you have to ensure that you review your financials regularly or deeply enough. Uloma had talked about Uloma had also mentioned the fact that certain financial reports for control purposes should be reviewed daily. You must know your numbers. Accounting must be second nature to you, so much that just by looking at your financial statements, you can decide whether something is off within your business or not. So again, just in wrapping things up, the shifts begin to happen when businesses begin to treat finance not as a back office function, but as a core part of strategy. That's when you move not just from operating, but by you start to move to building something that actually lasts. Finance has to be a core part of strategy, and for that to happen, as women, the founders or C-suite executives of a women-led business must take time to truly understand their numbers. Thank you very much.
Thank you so much, Oluwaseun. I think one thing has been established today, and it's that financial literacy is at the core of this conversation. So we're going to move on to Ms. Maureen now. Mrs. Maureen, over to you. Many businesses grow in revenue, but struggle with profit retention and reinvestment, which Oluwaseun just spoke about. How have you approached this in your journey?
Okay, thank you very much for the question. Again, it's always good to start from the beginning. When you start to sell your products, do your business, you would have determined what is the best price to sell at and what is the best time to collect your payments, so that you know what your revenues should look like. Financial literacy, just like Mrs. Oladimeji has said, Oluwaseun, is very important. You must have a structured way of capturing everything about your business, all the expense items, all the revenues, everything about the business. And then you have a clear separation of what the business is doing financially and what you yourself are doing from the expenses. They should be clear. So you must be structured. That structure needs to be there. And that structure comes from the very beginning, ab initio. What am I selling? This product or service that I'm offering, how much should I offer it for? Factor in, Mrs. Ojeagbase from Access Bank talked about exchange rate fluctuations and all the things that come with that. Factor in all that. So today, if, example, Nigerian budget was predicated on the basis of X, today the exchange rate is on the basis of Y. Because of what? Because of the current war in Iran. And we don't know the end of it. So you have to also hedge, building these buffers, even for the Black Swan event. Even the Black Swan that happens once in a lifetime, still hedge for it. If companies that plan for COVID, they were just coasting when COVID actually hit. And I was teaching a class, that's 2 weekends, and someone that was for the oil and gas told me that he was shocked for the first time in his life that when COVID hit, they just brought out the manual on risk management in extreme cases, and there was a manual, a template to run. So ab initio, I keep going back to the very beginning. And that's why we all as entrepreneurs and business owners and business leaders must think long term and not short term. That's number one. Number two, have a structure, understand financial structure. You must be financially literate. Yes, make it simple. Okay, what do your revenues look like? And then you need to understand what the revenues look like. You need to understand the implications of your cash flow, your balance sheet, and everything in it, your collection cycle. Like Mr. Ojeagbase said at the very beginning, women-led businesses tend to extend credit beyond what was agreed. You need to know the implication of that. And there's so much that has been said today. So the question is, many businesses grow in revenue but struggle with profit retention and investment because the things we plan to do, we don't stick to the plans. Number one, we don't stick to the plans. Either because we on our own shift the goalposts or the things we set aside, or we don't exactly hedge enough risks in the plan. Having said that, the simple, I can see we're 1 minute past the hour, so my response I'll make it short. Simple rule of thumb. You need to know what to spend money on and when to spend money. You need to know how much to save and when to save. And you need to know when to reinvest the money. But basically, be disciplined, stick to the plan that you set out on paper, make it happen in real life. Don't grant credit beyond what you have planned. If you do, make sure you also put that impact in your balance sheet so you understand the implications. And therefore, so when you're planning, again, think long term. It's all about the mindset. I think, in my opinion, having worked in corporates for well over 20 years and then being an entrepreneur now, a lot of us in this part don't think long term. If we think long term, we'll be able to also have the long term vision And so we now plan, okay, so that we don't struggle with profit retention and reinvestment. That is my take on this. It's 3 minutes past the hour, so I'll make it short. Thank you very much for the question. Very good question.
Thank you so much. So on to you, Mrs. Uloma. As more African businesses expand globally, what financial discipline or mindset shift is now non-negotiable for women? Hello, Ms. Uloma, are you with us? Can you hear me?
Oh, sincere apologies. I wasn't unmuted. Thank you. So I said that in response to this last question, I'll just write on what Mrs. Ogbonna had emphasized about us being already past the time that had been scheduled for this event. So I'll make my response very short and sharp. At this point, I think the things that are critical for women-led businesses that are seeking to scale beyond their current area of operation, we have to consider things like systems and structure. We can't rely on effort alone. We must be supported by systems. And what that system helps us to do is to help us formalize our financial processes. It gives us a clear governance framework, and it also has aligns us towards a defined decision-making framework. We also have to shift the mindset from just revenue to value preservation. If we are going to scale beyond our current level, we have to ensure that the profit we make is retained, like Mrs. Ogbonna had emphasized. So we have to shift from just making revenue in the immediate to ensure that the value we create is preserved and is able to take us continually as a going concern. We also have to shift our mindset from local to global, and we have to be aware of the risks that are prevalent across the globe. Like Mrs. Ogbonna also emphasized, the war in Iran has affected a lot of businesses beyond what they had imagined. She also referred to the Black Swan event, which is like an unforeseen event that can happen that will be beyond whatever risk that had been anticipated. So we have to make even if we are operating locally, we have to be aware of the risk that are prevalent globally and that can affect us locally. And we also have to, especially for women, there is this mindset of being in control of everything. I think for me, that is also a critical aspect. Women, we should learn to delegate with accountability. Scaling requires us to let go of doing everything, but in delegating, it is now the systems and structure that will enable us have control and also measure accountability. And for me, most importantly, we should shift the mindset from just income generation to wealth creation. Especially for women, we have to build more sustainable and transferable wealth. If we build businesses and those businesses do not transcend beyond our own legacy, beyond our own generation, it means that it's only short term. We should think more long term, and by structuring our businesses properly and effectively, we would have businesses that outlast the founders. Thank you very much.
Thank you very much for that very sound response. Thank you very much for that. So, on to Mrs. Maureen. Our time is fast spent now. Could you briefly tell us what financial mistakes you see women founders making that repeatedly prevent long-term growth?
The first mistake is having the mindset. They have a short-term mindset. They have a small mindset. They don't have a long-term mindset. They don't have a sustainability mindset. Mrs. Ojeagbase just said it. Legacy, when you're building for legacy, I think every business should not think in the immediate. Ask yourself a question. Why would you work so hard to set up a business and run it? And by the time you're leaving it because you're tired of doing it or you're too old to do it, it will not survive beyond you. I think that question is something we all need to address from the beginning. And it even addresses the question of controls, which Mr. Ojeagbase spoke to just now. Women like to be in control or to be in charge. I think all human beings like to be in charge. We parents like to be in charge. You know, we think we run it all. But when you think long-term, when you think sustainability, when you think legacy, beyond your lifetime, beyond you, the impact of what you're doing, you will shift your mindset from being the CEO, as in CEO from day one, for the next 20 or 30 years. You will start to now, in thinking long-term legacy, start to from day one. Maybe if not from day one, start to think about succession planning. And when you think long-term, when you think about succession planning, you'll start to set up systems and structures. My co-speakers have spoken a lot about defining controls in everything. You start to have those in place of how you can run this business when you're not there for vacation, when you're not there for 6 months, when you're not there in pre-retirement, not there even as the founder owner. So that's the financial mistake I see women make. It's from the mindset. So that's why they don't think long-term wealth creation. They just think short-term wealth generation. Not even there, they just want to make revenues. They don't think beyond that. So what happens when you're unable to go canvassing for customers or run the business? I think it's from the mindset. Once the mindset is set right, that you're building something of impact, something to last, something that has legacy, then we should be able to build on all the foundational pillars that set up a business right for the long term as well as for the short term. Thank you very much for that question. Just to make it short and snappy.
Thank you very much for your response. So for a very last question, on to Oluwaseun. If you had to reduce building a financially strong business to one core principle, what will that principle be?
Okay, so Dara, thank you so much for that question. And my response will be very simple: intentional control. And if we've listened across all of the speakers, two things have come up again and again: discipline. And if you stress discipline, you're really speaking about control. So intentional control is one core principle that is required to build a financially strong business. A financially strong business is one that is deliberate about how it manages both its systems and decision. So on one hand, you have the right infrastructure, but on the other hand, you need visibility, efficient processes, and clarity on how your money moves. We've spoken about money in various ways. We've talked about the fact that women need to be focused on building sustainable and transferable wealth. One of our speakers has also spoken about value preservation, and all of these things require intentional control. And again, we've talked about the fact that in intentional control, you have discipline deeply embedded. The discipline in relations to how you plan, how you spend, how you reinvest, how often you actually review your numbers, because you can have great systems, but without discipline, things will still fall apart. And you can be very disciplined, but if you don't have the right tools, you will still be limited. So it's really the combination of both structure and operation working together. And when a business gets that right, you see how confidently they make decisions, how fast they can snap out of unplanned operational bottlenecks, and how sustainably they grow. In fact, intentional control puts you in a position whereby you have enough buffers to take advantage of movements, positive movements in the market, to quickly outwit competition. Right. So so what I'm saying is a financially strong business understands their money their money fully. And that alone is a differentiator between a business that will survive and thrive in challenging economic terrains and one that will ultimately enter into receivership. Right. So when we talk about understanding your money fully, we're saying you know where your money is coming from. You have your plan for how it is moving, and you know what it's doing for your business, i.e., the return you're getting from every single naira or dollar you're investing in your business. Because once, as a business, once you have that clarity, which comes from intentional control, everything else improves. Your decisions, your discipline, your growth, and even your skill. And that's what we are truly looking to enable at Bluebulb, because we know that for you to drive intentional control, you need visibility. And with platforms like Orbiter, we're giving businesses that level of visibility and control to enable them scale with confidence. So at Bluebulb, we are really rooting for women-enabled businesses. Of course, we're rooting for all businesses, but March is Women's Month. And so we are really rooting for women-enabled businesses. And if you'd like to know more about what we do, how we're simplifying cross-border payments for African businesses, please feel free to reach us at our website, Bluebulb, www.bluebulb.co.uk, and then book a consultation call with us, or even chat us up on WhatsApp, and let's have that conversation going. Thank you very much, Dara, for that insightful question.
Thank you so much, Oluwaseun. So, and a very big thank you to all of our panelists for your invaluable insight. So we're going to move on to the Q&A session for anyone and everyone who has questions. We're going to keep this very brief. So please feel free to share your questions in the chat. We'll take about 2 or 3 questions before we go. So our first question is, at what point should a female founder shift from simply making money to building structured wealth? And what does that shift look like? Mrs. Maureen, would you like to take this question, please?
Okay, that's a good question. Okay, female founder, at what point in time should you shift from simply making money to building structured wealth? And what does that shift look like? I think it's from the very beginning. Well, of course, when you start your business, looking at your plan, you will know, you would have a plan on paper. And the idea is to get that plan on paper work in real life. So you give yourself time to first, you know how you plant a seed. You first plant the seed, you water it, you nurture it, you let it grow. So your business needs to have time to grow. Then you, like we have said here, the last 2 speakers have said, very carefully monitor. Your financials will show you your state of growth. Your financials will tell you how you're growing. Are you growing up? Are you growing down? And when you, as you go along that journey, you will know at what point in time. Remember the 3 basics pillars we talked about: when to spend money or what to spend money, when to save money, and when to invest. Okay, so as you do this, you will know, okay, when you start to move from just making money to survive, and you now start to build structured wealth. Structured wealth has to go with what? Investments. Investments either in the business or in assets, and yes, and plans and strategies that would build for legacy, for sustainability, and for impact. That's just the short version of this response or answer. That's a very good question. Thank you very much.
All right. Thank you very much, Ms. Maureen. So our next question would be going to Mrs. Uloma. How do I know my business is ready to scale?
Thank you very much for that question. I hope I'm unmuted. Yes, I'm unmuted. Thank you very much for that question. For me, I think like Mrs. Maureen had stated, it's always best to start and be ready right from the beginning, because as you enter into any business, there's always opportunity to expand. There's also opportunities for you to go beyond borders increase the number of products in your product lines, increase the different services you offer. So it's always good to be prepared from the beginning. But at the point where you see that you have excess savings, excess cash flow, you see that you're proficient in beyond the level that you are currently operating, that would then be a time to trigger all of the things that you have already put in place. Remember, we have talked about discipline, we have talked about systems, we have talked about controls, we have talked about the fact that you have to separate personal business from the business of the company. So if you start having all of those things from the beginning, at the points where you're ready to scale, which I've indicated that may be related to excess cash you see, at the point where you're seeing that you have opportunities to enter into partnerships, at the point where you see that what you are engaged in is also very relevant and very lucrative in other business environments, at the point where you see that there is a problem and you have identified the solution to that problem, those are different opportunities for you to then trigger the scale. But for me, the basic aspect is for you to have put in the discipline, the controls, the system from the very beginning, so that when those opportunities of excess cash flow, entering into partnerships, finding a very reliable and efficient banking partner and all that, you can then trigger all that you have already put in place. Thank you.
Thank you so much for that wonderful answer. We're going to take one final question. So it says, our dear organizers, wonderful, successful panelists, I have about 3 years to retire from the corporate world. What possible businesses can I begin to consider, please? I'm an investor in the stock market, mutual funds, property, and other money market investment.
So is that question open to any of us or all of us?
Oh, Ms. Maureen, please go ahead and take the question.
Okay. So I'm glad we're thinking beyond our current situation. But the retirement is in the next 3 years. And you go into a business that you're passionate about. You go into a business that even if you were not paid for it, you would do it. But of course, you're doing it for the money, if it's a for-profit. So what are the things you want to do? What is the benefit you want to give to people? What is the impact you want to give? That's the short answer. You have to do a self-audit of your interests and your hobbies. Sometimes the hobbies become the business. Sometimes the interests become the business. Sometimes it's your existing work that you now spin off into your retirement plan. That's the short answer, really. It's as different, the color is as different as all our faces are different. So there is no fixed answer to this. It's all up to you. And there are so many other things to consider. For example, I was in the corporate world for a few decades. And then I did operations for oil and gas and financial services and commercial. And so I decided, do I want to do that as an entrepreneur, even though I'm not retired yet? Do I want to do that? You also have to think about that. Dream, vision yourself. Do a self-audit, a life audit. What do you want to do at this time in your life? Vision it, and then you start to now actualize it. I think those are some of the things. This is beyond the masterclass. This question, the response to it is beyond the masterclass. It needs some good coaching and counseling and advisory here to be able to answer. But there's a lot of deep thinking. I'll add something here. Some organizations, especially those in the public space, devote the last year of work of their staff to getting them prepared for life as a retiree. An entire year. But I think it should start earlier than that. We should all start early enough to ask ourselves, what do I want to do after this? The what next? So in your career journey, as a new joiner in an organization, middle management, senior management, keep asking yourself the what next. And those what next will drive you to what you want to do. In what industry, what kind of service, what kind of work, how you want to end up. Picture your life in the next 10, 15, 20, 25, 30 years. And you know we're all living longer. So picture yourself into a really good old age and then start to work back from there on what kind of business you want to do and what kind of life you want to have, because that will determine the kind of work you want to do as a retiree. Thank you.
Thank you so much, Mrs. Maureen. So we're well aware that, some people still have more questions. We may not be able to take all because of our time. What we will do is be sure to communicate answers to you from our speakers via email. Thank you, everyone. So as we wrap up the session, I would love to thank our panelists for such invaluable insights that you've shared today. And thank you, everyone, for taking out the time to join us. The webinar is in celebration of Women's Month. It's a reminder of the importance of building businesses that are financially strong and positioned for long-term growth. So more women can scale with confidence, participate meaningfully in the global economy. The good thing is that at Bluebulb, we remain committed to supporting businesses with seamless cross-border payments. You've heard that a lot today because it is true. We have competitive FX solutions and financial infrastructure needed to grow and operate your business globally as a woman. So if you would like to learn more, explore how we can support your business, feel free to reach out to us using the contact details displayed on the screen. Feel free to check us out on www.bluebulb.co.uk. And from all of us at Bluebulb, we say thank you. Have a wonderful day. Enjoy the rest of your week. Bye, everyone.
Bye, everyone. Thank you, Maureen. Thank you, Uloma. Thank you very much. And thank you, Dara. Thank you.
Thank you, Dara. Thank you, everyone. Thank you, Bluebulb.
Thank
Bye-bye.
you. Bye.